Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for November 28th, 2011. This is Patrick Ceresna. As always, we start off with a chart of the S&P 500 using that spider exchange rate fund symbol SPY. We had a substantial breakdown below the 121 level in the middle of last week, which really started a few days of accelerated selling on the downside. We've really come to an absolutely huge make it or break it moment for the broader markets. At this stage, down over here in the 116 to 118 area is the zone from what is the natural Fibonacci retracements. This point is being reached at the same time as we're seeing key highs on treasury bonds and key levels on the currencies. If we have a circumstance where we have a good solid reversal off this level come this week, it would certainly allow the opportunity for this to still develop as a wedge and subsequently have a bullish rally higher. It would really at this stage, any legitimate breakdowns below the 116 really would open the window for drops all the way down to that 108 to 111 zone down below. Next year, we're going to take a look at the ISE US Regional Banks Index, which is symbol JLO, and more or less the regional banks have broken also that key pivot at the same time as the S&P and all the broader markets have done so the same. And we're really in the same situation here on the regional banks as we are with the broader markets. If the S&P 500 really accelerates selling below 116 on the SPYs, then there's still room for regional banks to drop all the way back down to their previous lows around that 1650 area on the downside. In the same regard, any broader market rally that starts off at this existing level, we could already be seeing this $18 low being a key level for that reversal back up. At this stage, it's still not very clear as to whether the bulls will win this fight or not, but we're going to be watching this critical level right in here. Next year, I want to take a look at the ISE Syndex, which is symbol SIN. This is the index of all the casino, tobacco, and distiller companies. And more or less, we had the Syndex break down also to a lower low. You can see the chart looks very similar in that of the S&P and even regional banks. Ultimately, this breakdown move here is coming up to some substantial support along that 113 to 115 area. If we see strong reversals and never breaking down below there, the circumstance could turn bullish for the Syndex, but we're going to first again see which way the market commits to first thing this week. Next year, I want to take a look at the ISE Home Builders Index, which is symbol RUF. And the home builders have actually done a pretty good job holding in here. Overall, even though there's a little bit of a topping formation at that 1730 with a subsequent little pullback here, so long as the bulls dig in and hold these support lines on the home builders here, we could see a low come in somewhere around these zones. The only circumstance where we're going to become more legitimately bearish on the home builders would be if we saw a substantial drop below the $6 level, which would be an indication of new deterioration. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM. And the natural gas index has also been pulling back with all the broader markets. The scenario repeats itself over and over on each chart that you look at. At this stage, this is also a key level. We've now basically done a 50% retracement of that entire rally. We're going to want to see this week whether or not the bulls can dig in and hold support lines and reverse things up from these levels. If we don't see any strength come back in early this week, then we have to consider the possibility that these types of indices are still going to go for a double bottom retest of the October low. But at this stage, we're going to first give the bulls the benefit of the doubt and see whether they hold these support lines. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is symbol UKX. And the FTSE has been legitimately weaker than that of some of the other global indices. It is already testing its August and October lows, just literally 16 points away from that 500 level. At this stage, there will be some important support lines here that will hold, but certainly if the S&P gives any indication of breaking down this week, then we could see a scenario where the FTSE even drops to a lower low throughout the trading week. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.